Welcome to the Transparent FX Academy. I'm Nick and I'm a top author trading with over 190k reputation points.
In this video, I will be speaking about USDCHF. Now, as usual, to keep the video as educational as possible, first, I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and how they're shifting their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss.
If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. Now, without further ado, let's jump straight onto the charts.
Starting here from the monthly time frame, what we can see is that at the moment we have a market which is currently approaching a quite strong historical support and demand area from a monthly standpoint. From here, in fact, multiple rejections to the upside have been created, and at the moment the market is approaching the exact same monthly support and demand area from which there is definitely the possibility of a potential rejection to the upside, as already happened in the past every time that the market tested this exact same zone. We can also notice that from a pattern standpoint, we have a quite clear impulse followed by this correction, and in general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse leg. And if we do that, we can notice how we have the 0.32, 50% and 0.618 Fibonacci retracements all lining up in this area of price, therefore creating a confluence of support that there is definitely the possibility of seeing more institutional longing inside of it. So when you have a confluence of support area, it means that you have multiple layers of support lining up in the same area of price. So there are multiple potential buyers that are using different strategies, also from an institutional perspective, that have a high probability of being longing inside of that area, especially if it is on higher time frames. And we will be speaking about institutional longing later on during the video. For now, let's drop down on the weekly time frame and see what we have. Well, from a weekly perspective, we can notice how at the moment the market has just reached exactly the previous weekly resistance from which this move to the downside was created, which is now turned support. We can also notice how the market is quite overextended to the downside, having created this massive push lower. And if we have an overextended to the downside market, that increases the probabilities of a potential rejection to the upside. In this case, a potential rejection away from this area. Dropping down on the daily time frame, what do we see? Now, from a daily standpoint, the situation is quite clear. We have a market which, in creating this push lower, has also created this daily M pattern. Now, in general, after the creation of an M pattern, what you would expect is for the market to create a rejection to the upside for the completion of the pattern at the neckline, therefore the previous support turn resistance. That is what you would usually expect when you have such pattern, and how most of the times the market reacts to a pattern like this. You can see, for example, here we had this M pattern, the market created a rejection to the upside, completing the M pattern at the neckline. We can see again, we had another one of those M patterns here, for example. The market here created a rejection to the upside, completing the M pattern at the neckline. So as we have also another M pattern here, and as we have already seen that on the weekly and monthly, we do have support all across this area, there is a good probability of seeing a potential rejection to the upside, completing also this M pattern. Now, if we go and see what we have when it comes to the commitment of traders, so what the big players in the market are doing precisely on the CHF, we can see that in the long run, we went from having a positive net positioning of minus 3.9k net positioning all the way down to minus 42.8k net positions. So institutions have been moving back to the bearish side for the CHF. And a weakening CHF makes USDCHF stronger. So essentially, institutions, by shorting the CHF, they are essentially longing USDCHF, therefore making it stronger. And a strengthening USDCHF increases the probabilities to see a potential rejection to the upside and completion of this M pattern. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find both on the screen and also linked in description, so you never miss new updates. Now, in a situation like this, where we have an M pattern here on the daily, the weekly time frame, as we have already seen, is testing the previous weekly resistance turn support, and the monthly time frame is testing historical support and demand. What would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to an intraday bullish market and we see more institutional longing of USDCHF during this push, at that point, I wouldn't be surprised to see a potential rejection to the upside for the completion of this M pattern. That definitely wouldn't surprise me. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked in description. From here, in fact, you will have the possibility to gain access to my entire courses. You will also have the possibility to gain access to one-on-one live private mentoring directly with me, the VIP market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this video, the trading station software, which puts together everything that you need as a trader all in one interface. And if you continue to scroll down the website past the testimonials, you will see that you have the possibility to join and gain automatically access with email and password that you will create during the sign-up process. So I really suggest that you go and check it out as soon as possible. The link is in the description and I will see you in it.
If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.